Good day. Welcome to another section of AE accounting tutorials. We are continuing our series on departmental accounts. But in this video, we will be taking a full practice question which includes the treatment of interdepartmental transfers. But remember that in the part 1 and 2 of this video, we've already looked at the basic concept of interdepartmental accounts, the accounting treatment of interdepartmental transfers, and the formats of this account as well. So if you are new to this channel, I will encourage you to subscribe to this channel, turn on the notification bell so that any moment I upload a new video, you will get notified on your devices. Thank you. So without taking much of our time, let's quickly go through the practice question and try to solve to enhance our understanding. Okay, so let's go through the question together. The following balances have been extracted from the book of Ericus Enterprises for the year ended 2022. Opening inventory, Department A, $4,500, Department B, $7,000. Sales, Department A, $19,400, Department B, $18,500. Closing inventory, Department A, $2,000, Department B, $1,000. Discount received, Department A, $450, Department B, $500. Return outwards, Department A, $200, Department B, no return outwards. Purchases, Department A, $11,000, Department B, $10,000. Insurance, $1,060. Light and cooling, $1,000. Discount allowed, $758. Delivering expenses, $379. Salaries, $1,450. Commission payables, $1,895. Rent and rate is $5,000. Additional information. Goods to the value of $1,000 were supplied to Department B from Department A. B. Services of $200 rendered by Department A for the benefit of Department B. 3. Salaries amounting to $150 are due but unpaid. Rent and rate $200 and insurance $60 have been paid in advance. 4. The following expenses are shared as follows. Commission, 5% on sales. Delivering expenses proportion to sales. Insurance in proportion of 3:2. Discount allowed, 2% on sales. Other expenses to be shared equally. You are required to prepare a departmental income statement for the year ended 31st December 2022. Alright. So to begin with the solution, take note that in the additional information, there is a transfers of goods from one department to another, and there is also a transfers of performance of service from one department for the benefit of other, okay? And there are also some expenses prepaid and owings. All these adjustments will be made in the departmental income statement. So when we begin with the solution, you actually understand how we present them in this account. Is that okay? So we are beginning the departmental income statement, okay? So the name of the business is Ericus Ventures or Ericus Enterprises, and it's very prudent or important to write it, okay? And this departmental income statement, it is almost the same as that of the income statement of a sole trader, what we've learned before, okay? But it is just that this is prepared in a columnar form for each department, okay? The reason why we prepare for each department is that we want to know the contribution of each department towards the net profit or loss of the business as a whole. So it is prudent to prepare the income statement for each department, okay, before we bring the total column. So that is what we will be doing. So the main issue with income statement we have to establish is that in this statement, what we'll be doing is that we'll be having our sales, that's the sales revenue. Then if there is any adjustment on sales, we're gonna make it. So then we less the cost of sales component, okay? So cost of sales, we less our cost of sales components, okay? Then we arrive at our gross profit or loss, okay? After looking at the gross profit or loss, then we add other incomes, okay? After that, we less our expenses. To arrive at our net profit or loss. Net profit or loss. So this is what we will be doing in this departmental income statement, but just that we will be preparing it for each department. So from the question, we have Department A, we have Department B, we have the total. The reason why we are bringing the total is that the total will show us the net profit or loss of the business as a whole. So it is the total column of the net profit that is what we'll be using to prepare the final statement of financial position, okay? So for instance, the closing stock that will be used to represent a current asset in the final statement of financial position will be taken from that of the total column, but not the individual departments, okay? So now we begin with our sales, okay? So let me bring my currency sign in dollars. So we begin with the sales. Okay, from the question, the sales for Department A is an amount of 19,400. Department B is 18,500, making a total of 37,900. Very good. Okay. So from the question, there is no return inwards. So no adjustment will be made on sales, okay? So let's consider the cost of sales component, okay? So cost of sales. So let's cost of sales. With the cost of sales, we begin with our opening stock, okay? On the opening inventory. Okay, so with the opening inventory for Department A is an amount of 4,500 from the question and 7,000 for Department B. Okay, making a total of $11,500. Is that clear? So after considering our opening inventory, then we have to add our purchases. Okay, so we have to add our purchases. We have to add our purchases. And our purchases from the question for Department A is 11,000. For Department B, it is an amount of 10,000. Okay, making a total of $21,000. Okay, so now we are done with the purchases components. Okay, then we should have to add them up to know the total. So let's add these two, okay? So these two give us 15,500, 17,000, and this will give us 32,500. Is that clear? Alright. Now after considering our purchases, we have to go through the question to see if there is any return outwards, okay? That is where a business decided to return part of the goods to its suppliers, okay? So there is a return outwards in the question. So return outwards. From the question, Department A has a return outwards of 200. For Department B, there is no return outwards. Okay, so by making this adjustment, we have 15,300 the same 17,000, and this will give us 32,300. Is that clear? Okay. Now, this amount is supposed to be the net purchases. Okay. But mind you, there is no other adjustment to be made on this. So this amount is the same as the cost of goods. The cost of goods available for sale. Okay. And after arriving at our cost of goods available for sale, we have to go through the question to see if there is a transfers of goods. Okay, because from the concept of interdepartmental transfers of goods supposed to be adjusted on the cost of goods available for sale. So in the additional information, you can realize that additional information 1, goods to the value of 100 were supplied to Department B from Department A. Okay, it means that Department A transfers goods of an amount of $100 to Department B. Okay, so this transfers is at cost. Okay, if it is at selling price, the question should have tell us there should have been a profit margin on the cost of the goods, but it is at cost. Okay, so transfer of goods. An amount of 100. Okay, so A transfer to B 100. Okay, A is transferring, so we take it out from A's cost of goods available for sale and add it to the cost of goods available for sale for Department B. Is that clear? And it is not going to affect total because negative positive cancels out. So take note that transfers does not affect the total column of the departmental income statement. Is that clear? Then let's continue. So after looking at the transfers of goods, let's consider, then before we consider any other thing, let's make this adjustment as well. So this will give us an amount of 15,200, 17,100, the same 32,300. Now let's have our closing stock. So closing inventory. Okay, so from the question, the closing inventory for Department A is an amount of $2,000. For Department B, $1,000. Okay, we are lessing the closing stock, and the total is $3,000. Is that clear? All right. And this, when we take this from this, it is going to give us an amount of 13,200, 16,100, and this will give us an amount of 29,300. Okay. Now this will be the cost of sales. Is that okay? So after taking the closing stock from this, we arrive at the cost of sales. This is what we are looking for, the cost of sales. Now, when we've arrived at our cost of sales, look at what we've done here. Okay, we take the cost of sales from the sales to arrive at the gross profit or loss. So the same thing applies to here. We are going to take this cost of sales from the sale for Department A, take the cost of sales for Department B from the sale of Department B in that order. Is that clear? So to do this is very, very simple. So we do the subtraction, and this will give us an amount of 6,200. This will give us 2,400, and this will give us 8,600. Okay, and this will be our gross profit. Our gross profit. Okay, now let's consider if there is any income. Okay, so from the question we can realize that there is a discount received. Okay, there is a discount received. Discount received is an income. So discount received. Discount received for Department A is $450, Department B is $500, making a total of $950. So we add them up. So this will give us 6,650, 2,900, and this will also give us 9,550 as the total income. Is that clear? Good. This is our total income, and because of the board, we need to continue from here. So we are going to consider our expenses and try to take it out from the total expenses to see if you will be arriving at a net profit or loss. Is that okay? So from the question, the first expenses I'd like to talk about is insurance, okay? But mind you, any expenses you take, you have to go through the footnotes and try to see if there is any prepaid or owings, okay? Or if there is a suitable basis of apportionment for us to share or apportion the expenses between the two departments, okay? So insurance, let's go through the additional information. So additional information, theory says that salaries amounting to $150 are due but unpaid. Rent and rates $200 and insurance $60 have been paid in advance, okay? So there is a prepayment of insurance that is $60, but the insurance paid is an amount of $1,060, okay? And there is a prepayment, okay? So we have to take out the prepayment of $60 so that the balance will be $1,000, okay? So this $1,000 is what will be presenting as insurance in the income statement, okay? So we have insurance. For insurance, the total amount is $1,000, okay? Now you have to apportion this 1,000 between Department A and Department B. Is that clear? So with the basis of apportionment, the insurance basis of apportionment, that the following expenses are shared as follows. For insurance, in a proportion of 3:2, okay? So in a proportion of 3:2, so the total ratio is 5. So for Department A, 3 out of 5 multiplied by the 1,000, giving us $600. For Department B, the 2 out of this for Department A, this Department B, okay? So out of 5 multiplied by the 1,000, giving us $400. So for Department A, insurance is $600. Department B is $400. So the total is $1,000. Good. So the next expenses in the question is light and cooling. Okay, so light and cooling. For light and cooling, the amount is $1,000, and there is no prepayment nor owings. Okay, so for lighting and cooling, there is no suitable basis of apportionment for it. So all other expenses to be shared equally. So we share this amount between the two departments equally. Okay, so each department will get $500. Okay, so the next expenses I would like to also talk about is discount allowed. Okay, so discount allowed, and the total amount of discount allowed is $758. Okay, and its basis of apportionment is 2% on sales. Okay, for discount allowed, its basis of apportionment is 2% on sales. Okay, And they said on sales, and this is very reasonable because we allow discount to our customers. Before we have our customers, we need to make sales to them. So discount allowed, we apportion it based on the sales of each department. So for department A, 2%, that is 0.2 multiplied by the sale. The sales for department A is 19,400. For department B, the same 2% multiplied by each sales, 18,500. Okay. So for department A, we get an amount of 388. Department B, 370. Okay. So we allocate the expenses to them. Very good. So the next expenses I would like to talk about over here is the delivery expenses. So delivery expenses, and its basis of apportionment is proportion to sales. That is sales proportion. Okay. So to determine the sales proportion, this is the sale for department A, sale for department B, and the total. Okay. So the portion of this total sale against department A is 19,400 divided by the total, which is 37,900, multiplied by the delivery expenses. So let me write delivery expenses. Okay. And the total of the delivery expenses is an amount of 379. So you multiply by 379. Okay, and that is going to give us $194. So for department B, you have 18,500 divided by 37,900 multiplied by the same 379, which is going to give us $185. So we allocate it accordingly. Is that clear? So let's consider the next expense. The next expense is salaries. Okay. Salaries. And the total salary is an amount of, total salary is 14,450. So 1,450. So additional information. Theory says that salaries amounting to 150 are due but unpaid. That is salaries owings or salaries outstanding. So we have to add the owings. That is 150, making a total of $1,600. So salary is $1,600. And it does not have any suitable base of apportionment. So they said all other expenses are shared equally. So we share the 1,600 equally. So each department will get $800. Is this clear? Good. And the next expenses to talk about is commission payable. Okay. So commission payable. Okay. For commission payable, the total amount is 1,895 from the question, and its basis of apportionment is 5% on sales. Okay, so for department A, 0.05 on sales, that is 19,400. For department B, 0.05 multiplied by the 18,500. Okay, so for department A, that will be 970. Department B, 925. Okay, so 970, 925. Very good. I hope you are getting the concept very well. Okay, so the next expenses is rent and rates. Rent and rates. For rental rate, the question is $5,000, okay? 5,000. But let's go through the additional information to see if there is any information relating to it. And rental rate $200 have been paid in advance, okay? That is prepayment. So we need to take out the prepayment of 200, make it 4,800. 4,800. So rental rate is 4,800, and there is no specific base or apportionment for it in the question. So all other expenses are shared equally. So by sharing this equally, each department will get 2,400, 2,400. Okay. So we are done with the expenses, but there is one thing we have to talk about. That is the additional information too. That services of $200 rendered by Department A for the benefit of Department B. Okay, this means that there is a service that costs an amount of $200 that's supposed to be rendered by Department B. Okay, but Department A has rather made that, or has rather rendered such services. Okay, so to make the entry, this is how we do it. So transfer of service, and the amount is $200. So Department A render it for the benefit of Department B. So we need to take the cost out of Department A and add it to Department B. Or better still, we debit Department B profit and loss account and credit Department A profit and loss account. Okay, and it has no effect on the total. Okay, because this is negative, this is positive, and it cancels out. So now let's add the total expenses so we can see how we go by it. So with these total expenses, we add all this and subtract this. That is 5,652. Then we add all this, that is 5,780. Then we add all this, that is 11,432. So this is the total expenses for each department. Now we take out the total expenses from the total income to determine our net profits or loss. So when we take this from this, we arrive at an amount of $998. Here, the total expenses is bigger than the total income. So this will be 2,880 and loss. Okay, then obviously the total expenses here is bigger than this total income. So we have 1,882 also loss. Okay, so net profit or loss. Okay, so this means that Department A makes a profit, Department B makes a loss, and the total is a net loss of the business. So these are some of the reasons why we prepare departmental accounts. We want to know the contribution of each department towards the net profit of the business as a whole. Okay, so we can establish something here that Department B makes a loss. Okay, so if you're an accountant, what is the advice you'll be giving to management? I think it is very prudent for management to close down Department B and transfer all these resources to Department A in order to increase the profitability of this business. or they have to find ways and means to improve upon the profitability of Department B, okay, in order to increase the profitability of the business as a whole. So basically, these are some of the reasons why we prepare the departmental account. If you didn't prepare it separately, you wouldn't have known which department is making loss towards the net profits of the business. So I think this is all about departmental accounts. I think with this, any question you make on departmental accounts, you'll be able to solve it, okay? So this brings us to an end of this chapter. In our next topic, I think we'll be looking at accounting for high purchases. So if you haven't subscribed to this channel, just make sure you subscribe to the channel, you turn on the notification bell so that any moment I upload any new video, you will get notified. Until we meet, I think it is bye for now.